All right, let's jump right in. Today, we're going to take a deep dive into technical analysis.
Okay.
We're looking at excerpts from Technical Analysis of the Financial Markets by John J. Murphy.
Right.
And this book, it's kind of like the holy grail for anyone who really wants to understand how trading works.
It really is a classic for a reason.
Yeah,
You know what I think is really fascinating about it is that it doesn't just throw all these charts and patterns at you right away.
right.
It actually starts by talking about the philosophy of technical
I
analysis,
love that.
the fundamental beliefs that underpin the whole approach.
Yeah, you got to start with the why before you get to the how, right?
Exactly. And one of the most fundamental tenets of technical analysis is this idea that market action discounts everything.
Mm,
That might sound like a pretty bold claim, but when you think about it, like the current price of a stock or a bond, or even Bitcoin for that matter,
yeah,
it's reflecting all known information at that moment in time,
right.
from earnings reports to geopolitical events,
Even rumors.
even the whispers and rumors that
Yeah.
are swirling around the market.
So instead of like trying to, I don't know, read every single news article and look at every economic report,
Right.
technical analysts are saying, well, just look at the price.
It's all baked in already.
Okay, interesting.
And that's where charts become so powerful,
Okay.
because the charts are the visual representation of all of that information.
All that data,
Yeah.
all those opinions.
It's the collective wisdom, if you will, of the market.
Okay, so charts, but not just any old charts.
Right.
These are charts that have a very specific language.
Absolutely.
Mm.
See, technical analysis operates on the assumption that prices move in trends,
Okay.
and these trends tend to repeat themselves over time.
So we're not predicting the future, but we're recognizing patterns that have occurred
Right.
in the past, and then,
Yeah, and understanding the probability that they may occur again.
all right,
Not about predicting the future with absolute certainty. It's about probabilities.
it's about increasing your odds.
Exactly.
So I always think about it like, those nature shows where they're tracking animals,
Oh, yeah.
and you can look at the footprints and you can see where they've been and where they might be going.
Right.
And it's kind of like that with the stock market.
That's a fantastic analogy.
Yeah, you're looking for the footprints.
It is. And just like an experienced tracker can tell a lot from a few footprints,
Right.
the skilled technical analyst can glean a wealth of information from a simple price chart.
And that's where the art comes in, right?
It is, it is.
I always wondered how technical analysis differs from fundamental analysis.
Yeah, it's a great question.
Because with fundamental analysis, you're looking at a company's financials and the industry and all these hard numbers.
It's a different lens, really.
Okay.
Fundamental analysis is about understanding the intrinsic value of an asset.
Right.
But technical analysis is about studying the price action itself.
So it's kind of like two sides of the same coin.
Exactly.
One side is the what and one side is the how.
Yes. And both are valuable tools for making investment decisions.
It's all about context.
Right.
Now, here's where I think it gets really interesting. John Murphy talks about the importance of timing your entry and exit points.
Timing is crucial.
That's like the secret sauce, isn't it?
It really is, and it's especially important in markets where things move really fast. Futures, crypto,
Yeah, where there's a lot of volatility.
extreme volatility.
Because you can have the right idea.
Right,
You can know the market is going up.
right.
But if you buy at the peak and then sell at the dip, you've lost.
You haven't made any money.
You've done it all wrong.
Yeah,
So timing is everything.
it is.
But one thing that I find, kind of mind-boggling about technical analysis
Okay.
is that it can be applied to so many different markets.
Right.
It's not just stocks.
That's the beauty of it.
It's bonds, commodities, currencies.
It's the flexibility. You can apply these principles to so many different things.
So whether you're looking at Apple stock
Yep.
or you're looking at the price of gold
Exactly.
or the latest meme stock,
The language of technical analysis remains the same.
it's all there.
It's a universal language, a way of understanding market behavior across different asset classes and timeframes.
Now, you can't talk about technical analysis without mentioning Dow theory.
Of course, it's a cornerstone.
It's like the granddaddy of them all.
Right.
And it's been around for over a century,
Over a century.
which is incredible.
Yeah.
But how does this theory apply to today's markets?
Well, one of the key insights of Dow theory
Hmm.
is that major market trends are confirmed by the movements of both the industrial and transportation sectors.
Oh, interesting.
The idea being that, if businesses are truly thriving,
Yeah.
you're going to see it reflected in both the production of goods and the transportation of those goods to market.
So it's like a double confirmation signal.
Yeah.
Yeah.
Even though the theory was formulated in a very different era, this core principle still remains incredibly relevant today.
It's about looking at how things are interconnected.
It's about understanding the interconnectedness of the economy.
The economy is a complex system,
It is.
and you have to see how all the pieces fit together.
Exactly.
Okay, so we've laid the groundwork here, the philosophical foundation, if you will.
The why of technical analysis?
The why, yeah, of technical analysis. Now let's get to the how.
Let's get into those charts.
Let's talk charts. I'm ready to decipher the market's secrets.
All right. Charts are the primary tools of the technical analyst.
Yeah.
And understanding how to read them is absolutely essential.
I'm ready.
But before we can dive into those really interesting patterns,
Yeah.
we need to cover some of the basics.
Okay.
The different types of charts, the essential elements that they contain.
Okay. What am I looking for when I first pull up a chart?
So the most obvious element is going to be the price.
Yeah.
And that's typically plotted on the vertical axis.
Up and down.
Yeah, up and down.
What else?
Then you have volume, which tells you how many shares or contracts were traded over a given period.
Volume's important.
Volume is key. And then finally, there's something called open interest,
What?
which is particularly relevant in the futures markets.
Got it.
And that represents the total number of outstanding contracts at the end of a trading day.
Price, volume, open interest. Okay, got it. Those are the three main things. But what am I trying to learn from those things?
You're looking for trends.
Trends.
Trends are like the heartbeat of technical analysis. They tell us where the market is going. Is it going up, down, or is it just moving sideways?
Trends tell a story.
They do.
And within those trends, we have different time frames.
Right.
We have major trends, intermediate trends, and short-term trends.
Exactly. All fitting within each other.
Like those Russian nesting dolls.
That's a great way to think about it.
Yeah, so you open one and there's another one inside.
And each one of those trends
And then another one.
has its own personality.
Wow.
Its own rhythm and momentum.
So we're not just looking at random ups and downs.
Yeah.
We're looking for those underlying currents,
Yeah.
those waves of market sentiment that are driving the price action.
That's exactly it.
Okay.
And to help us visualize those trends, we have tools like trend lines, support levels, and resistance levels.
Ah, okay.
These are like the signposts on the road,
Tell me about those.
giving us clues about where the market might be headed.
Okay, I'm ready.
All right.
Tell me about trend lines and support and resistance levels.
All right, let's do it. Okay, so imagine like you're drawing a line, connect the dots of the prices on a chart, either rising or falling prices, and those are the trend lines.
Okay, so it's like drawing a line through the peaks or valleys of a mountain range to kind of get a sense of the overall elevation.
Exactly. And those trend lines can act as support or resistance levels.
Okay.
So a support level is like a price level where the buying pressure is really strong
Okay.
and it prevents the price from falling further.
Like a floor.
It's like a floor, yeah, holding it up, and then resistance would be the opposite.
The ceiling.
Yeah, like a ceiling preventing the price from going any higher. And those levels are often marked by previous highs and lows on the chart, points where the market really struggled to break through.
So it's almost like the market has a memory.
It does.
It remembers those points.
Right. And when price breaks through a trend line or a key support or resistance level, that can signal a really significant shift in market sentiment, which can lead to a big move.
It's like building up pressure.
It is. And like a pressure cooker.
Yeah, and it finally releases.
And boom.
That's when things get exciting.
Now let's move on to the fascinating world of chart patterns.
Okay.
These patterns are like, recurring formations in the price action that can give us clues about where things might be headed.
You mentioned some earlier, like the head and shoulders.
Yeah.
And double tops and triangles.
Right.
What do those look like?
Okay, so imagine the head and shoulders pattern. You have a price chart. It's rising to a peak. Then it falls back a little bit.
Okay.
Then it rises to a higher peak. That's the head. Then it falls back again. And then it rises to a peak that's roughly the same height as the first peak, forming the second shoulder.
So it actually looks like a head and shoulders.
It does, yeah.
That's cool.
And then what's really interesting is what happens after that right shoulder forms.
What happens?
Often the price will break down through a support line, casing the lows between the head and shoulders.
Oh.
That's called the neckline.
Neckline.
That breakdown is often seen as a strong bearish signal that the previous uptrend may be about to reverse.
So it's like a warning sign.
It is.
Okay, what about double tops and bottoms?
Okay, so a double top forms when the price rallies to a peak, falls back.
Yeah.
And then rallies again to that same peak level, but it can't break through.
So it's like it tries to make a new high, but it fails.
It's like a test of strength.
Okay.
The bulls are trying to push it higher.
And they can't quite do it.
But they run out of steam.
Yeah.
A double bottom is the inverse of that, where the price drops to a certain level twice and it can't break through.
So it's testing the lows.
It's testing the lows, yeah.
And if it can't break through, that could be a bullish signal.
Right. It could be a sign that the downtrend is ending.
Okay, interesting.
And then we have triangles, which
Triangle.
are formed by these converging trend lines.
Okay.
So imagine the price bouncing between a downward sloping resistance line and an upward sloping support line.
So the price action is getting squeezed.
It's getting squeezed. It's like a coiled spring.
Okay.
And eventually that spring releases
Yeah.
and the price breaks out of the triangle,
Up or down?
either up or down.
That's the big question.
And the direction of that breakout often signals the direction of the next big move.
So these are the reversal patterns, the ones that indicate the trend might be changing.
Yeah.
But you also mentioned earlier these continuation patterns, these sort of like pauses
Right.
in the trend.
Those are like pauses during a journey, a chance for the market to catch its breath before continuing in the same direction.
So flags and pennants are really classic examples of that.
Okay.
Imagine like a really sharp price move, almost vertical.
Okay.
And then it's followed by a period of consolidation where the price trades in a tight little range, kind of like a flag or a pennant on a flagpole,
It's like the market's taking a break.
taking a breather,
Okay.
gathering energy for the next leg of the move.
So we're looking for that breakout from the flag or the pennant.
Right. And often what you'll see is that volume dries up during the formation of those patterns.
Okay.
And then it picks up again on the breakout, confirming that the trend is likely to continue.
So volume is like a confirmation signal.
It's a big clue.
Okay.
Then we have wedges and rectangles.
Okay.
Wedges are similar to triangles, but they slope in the direction of the trend.
Okay.
So for example, a rising wedge during an uptrend can actually be a bearish signal.
Wait, really? Why would a rising wedge during an uptrend be bearish?
Because the angle of the wedge suggests that the upward momentum is starting to weaken.
The buyers are struggling to push it higher.
So it's running out of steam.
Exactly.
Okay.
Rectangles, on the other hand, are formed when the price trades sideways in a range
Oh,
between two parallel lines.
So it's like the buyers and sellers are kind of in a tug of war.
They're battling it out, yeah.
Yeah.
And eventually one side wins,
Okay.
and you get that breakout from the rectangle.
This is fascinating stuff. It's like you're giving me a whole new language to understand what's happening in the market.
It is a language. It's a way of seeing the market through a different lens.
You know, one thing I appreciate about John Murphy's book is that he doesn't just explain the technical stuff.
Yeah.
He also emphasizes the importance of risk management
Right. You can't forget about risk.
and using technical analysis in conjunction with other forms of analysis.
He stresses that it shouldn't be used in isolation.
So it's not just about looking at charts and ignoring everything else.
It's one piece of the puzzle. It's most effective when you combine it with, a sound understanding of market dynamics and a disciplined approach to managing your risk.
So it's about having a holistic approach to trading.
Exactly.
Okay, so we've talked about trends, trend lines, support and resistance levels, reversal patterns, continuation patterns.
We've covered a lot of ground.
Yeah, it's a lot to take in,
It is.
but I'm starting to get it.
It starts to make sense the more you look at charts.
Yeah, definitely.
Now, before we move on to technical indicators, let's go back to those secondary indicators that we touched on earlier. Volume and open interest.
Right.
Because those play a really important role in confirming the validity of the trends
Oh,
and those patterns that we were just talking about.
so you mentioned volume is like the market's vote of confidence.
It is. It tells you how much conviction there is behind a move.
So how do we interpret volume in relation to price?
Think of it this way. If the price is rising and volume is increasing,
Yeah.
that suggests really strong buying conviction. The buyers are eager to jump in,
Okay.
and they're pushing the price higher.
But if the price is rising and volume is weak.
That could be a warning sign.
Okay.
It might be a false breakout, a lack of real buying interest.
So it's not just about the direction of the price, it's about the force behind the move.
Exactly. Volume gives you that extra layer of information
Okay.
to help you gauge the strength of the buyers and sellers.
What about open interest?
Open interest adds another really important insight, especially in the futures market.
Okay.
Rising open interest along with rising prices.
Yeah.
That usually confirms a strong uptrend, indicating new money flowing into the market.
It's like seeing fresh tracks in the snow.
It is.
New players are entering the game.
Yeah, but on the other hand, if open interest is declining while prices are rising,
Right.
that could suggest that the rally is being driven by short covering
Okay.
rather than new buying, which might not be as bullish.
So it's like distinguishing between a genuine stampede of buyers and a temporary rush to the exit.
That's a great way to put it. Volume and open interest. help us differentiate between those scenarios.
So it's like we're piecing together a puzzle, looking for clues from multiple sources to get a clearer picture of what's really going on.
That's exactly what it is.
This is really fascinating stuff.
It is. It's a lot more than just crunching numbers. It's about understanding the psychology of the market,
The human element.
the human element, those subtle cues, and using them to make better trading decisions.
You know, as we've been talking about all this stuff, I can't help but wonder about those people who dismiss technical analysis.
Right.
They think it's just voodoo
Yeah.
or gambling.
It's understandable. I mean, especially if you come from like a purely fundamental analysis background.
Right.
But, I think that skepticism often stems from a misunderstanding of what technical analysis is really trying to do.
I think some people just see those charts with all the lines and squiggles.
Yeah.
And they think, oh, this is just some kind of
Right.
like mystical attempt to predict the future.
Exactly. It's not about predicting the future with absolute certainty.
Okay.
It's about recognizing patterns, understanding probabilities, and managing risk.
So you're saying that human behavior,
Hmm.
even in the financial markets, tends to repeat itself.
That's exactly it. Just like a psychologist might study behavioral patterns
Yeah.
to understand their patients,
Yeah.
a technical analyst studies those chart patterns to understand the collective psychology of the market.
It's like watching a flock of birds, all changing direction at the same time.
Hmm.
There's no one bird that's the leader, but they're all responding to these subtle cues,
Yeah.
creating these like really beautiful patterns.
That's a brilliant analogy. And in the financial markets, those subtle cues are reflected in things like price action,
Right.
volume, open interest.
Okay.
Technical analysis just provides us with a framework to interpret those cues.
Okay, so it's not magic.
No
It's
magic.
not a crystal ball.
No crystal.
It's about recognizing that even in this chaotic world of the financial markets, there are patterns.
Absolutely.
Okay.
And the more you study those patterns, the better you'll be able to navigate the markets.
One of the things I really like about John Murphy's book is that he talks about the importance of continuous learning. He's not saying, okay, just learn this one thing and then you're done.
Right.
It's an ongoing process.
He encourages readers to go beyond just the basics and,
Yeah.
explore different indicators, try different trading systems.
Different philosophies even.
Yeah.
Okay.
It's a journey.
So for someone who is just starting out,
Mm.
who's maybe listening to this deep dive and thinking, okay, I want to learn more,
Yeah.
what would you recommend? What's the first step?
Practice, practice, practice.
Practice.
Look at as many charts as you can. The more you look at, the better you'll get at recognizing those patterns.
So it's like learning a language.
Yeah.
You got to immerse yourself.
Immerse yourself.
I know.
Absolutely. And the second thing I would say is don't be afraid to experiment.
Experiment.
Yeah. Try different indicators, different systems, and just find what works for you in your own personal trading style.
So it's not about blindly following somebody else's system.
No.
It's about developing your own approach.
Yeah, you got to find what resonates with you.
What resonates with you? Okay.
And then finally, the third thing is always manage your risk.
Oh, that's important.
It's crucial.
Because no strategy is foolproof.
Oh,
There are going to be losses.
absolutely.
Okay.
Protect your capital by setting stop-loss orders and never risk more than you can afford to lose.
Learn the basics, practice, experiment, manage your risk,
Yep.
and never stop learning.
That's it.
Okay.
Technical analysis is a really powerful tool, but it's just one tool.
Okay.
Combine it with other forms of analysis.
Other tools in the toolbox.
Exactly. Stay disciplined and never lose sight of the bigger picture.
Well, this has been a fantastic deep dive.
It has been fun.
Thanks to John Murphy's book and your expert guidance. I feel like I've learned so much,
Good. I'm
and
John.
I'm excited to explore further.
Yeah, there's a lot out there.
It's like you've opened a door to a whole new world.
It is a whole world, and remember, this is just the beginning.
Okay.
There's always more to learn, keep experimenting, and who knows what you might discover.
Excellent advice.
Mhm.
Until next time, keep those charts handy and happy. Trading everyone.